the market valuations are largely because of the Fed creating money and the money going into the stock market, the corporate buybacks of shares, and that's what's feeding it. Fundamentally, the economy is contracting, real estate is down, the transportation index is down, housing is starting to decline. So those are all the decline, and that's pretty much global. So there's no justification for the stock market to be going up. But this is typically what happens in the tail end of a bubble. You get that final push up, and people kind of lose their sense of reality, get caught up in the momentum of the thing. But that's the most dangerous time. That's when you should just take your money off the table and sit it out. When you look at it from this point forward, stock market could decline 50 to 70%. What's the upside? 5-10% maybe. Not the kind of odds I like.
Welcome back to Finance and Liberty and Reluctant Preppers. We are back with Nick Barisheff, the CEO of BMG Group and the president. He's also the author of $10,000 Gold, and we've had him on before to answer your viewers' questions. This time we want to get to some more specific questions, drilling in on the topic of $10,000 gold that we didn't get to last time. Nick, thank you for joining us again here on Monday, November 4th, 2019.
Thanks. My pleasure to be here.
The last time we had you on, you were a great sport. You fielded lots of questions from our viewers that had been submitted ahead of your interview here. And again, wanted to remind people that we had the pleasure of meeting you in person for the first time at a special event in Toronto, where we received a copy of your audio CD, $10,000 Gold, and have been listening to it and learning so much from it. It's truly a detailed and thorough treatment of the topic of what gold is, what it's been historically in people's lives, what it means to us, and so on. And I'm wondering if you could help our viewers understand, just kind of give us a taste of that, and starting off with, what were the chief reasons that you wrote the book $10,000 Gold, and what were the main driving factors that convinced you that that's the appropriate target to look for in valuation of gold going forward?
Well, when I wrote the book in 2013, the number $10,000 gold, I was like a lone wolf in the wilderness, and some of the interviewers probably thought I was crazy or whatever. But now there's many of the financial observers have come up with the same number or higher. Jim Rickards talks about 10,000 gold as the bottom number, 40,000 as the upper number. Pierre Lassonde talks about $25,000 gold, and so on. So we have these different ways of looking at it. The way I looked at it when I wrote the book was that, and I'm going to round off just for ease of arithmetic terms, is there's 300 trillion in financial assets, meaning stocks and bonds, not counting real estate, just stocks and bonds. When you look at above ground gold, and you don't count the central bank holdings, which are now buyers, and you don't count the jewelry primarily in India, which is monetary gold, what you have is about 1.7 trillion of investment grade bullion. Now, what we don't know out of that 1.7 trillion is how much is owned by the world's wealthiest families, like the Rockefellers. And those families hold gold for a multi-generational basis, and I don't think they will ever sell or exchange their gold for pieces of paper.
Just so we're clear, 1.7 trillion of what units are you referring to?
1.7, like in US dollar terms. So we have 1.7 trillion in physical bullion. So the issue is, right now there's about 0.5% of global portfolios allocated to bullion. So this is pension funds, institutions, private. It's only 0.5%. If you go from 0.5% to just 5%, then what that means is 5% is 300 trillion. It's 15 trillion. Trying to buy 1.7 trillion. So it doesn't divide. And that's where you have to have a multiple of 10 times the amount. So when people get nervous and move from stocks and bonds into gold, even if they only go to 5%, you'll have that kind of demand. Now, the other thing to understand is the mine supply won't make up for the increased demand. Mine supply is already in decline. The exploration expenditures are in decline. Discoveries are in decline. And with the environmental rules being what they are, it takes about 20 years to go from discovery to production. So if gold price was to go to 10,000 tomorrow, you wouldn't see any mine production for 20 years. So that's a very simple analogy. The other way to look at it is the gold price relative to US debt. It's been largely correlated up until 2011. After 2011, US debt kept rising and the gold price fell off. Right now, to get back to that correlation, rough numbers, you need $2,500 gold. So it'll eventually get up to that number and then continue rising. Nobody's talking about reducing US debt. It's rising faster and faster with every passing year.
That's absolutely true, and regardless of what color of red or blue team that's occupying the White House, the rate of acceleration just continues, administration after administration.
That's right. So, and that's where the solutions to it are not politically expedient for any party to get elected on. So nobody talks about it. But we've got a couple of other major problems on the horizon. When we had the 2008 financial crisis, the mortgage debt was about 1.2 billion, and right now the student loan debt is 1.6 billion. And before the mortgage crisis started, there was only a 5% default rate. Student debt, we already have a 20% default rate. So we've got a much bigger crash coming along. But worse than anything is the fact that if you look at unfunded pension liabilities, that number is 300 trillion globally. Now 300 trillions, too big a number for all the central banks in the world together to print. So that's not going to happen in terms of a bailout. In California, you're already getting situations where existing retirees, teachers, policemen, firemen are getting a letter in the mail saying, so sorry, but your pension check from here on in is going to be 60% less. So how do you survive then? And that's just the beginning. Chicago, Illinois, totally bankrupt, numerous pensions. So this is a coming huge, huge crisis that there are no solutions. There are just not enough workers working to pay for the retirement benefits of the retirees. And most pension funds only have stocks and bonds. Everybody talks about a diversified portfolio. Nobody does it. Two best performing asset classes have been real estate investment trusts and gold, and most pension funds don't have either.
Now, the factors that you're describing and the major trends that you're describing, some of these are not going to turn anytime soon. The demographic mega trends that you're describing are going to play out over the next generation and a half at least. And you mentioned as far as the dearth of exploration of new gold supplies, that kind of thing. But when you wrote your book in 2013, some things have changed since then. Are there any new factors that have appeared that you didn't see coming at the time but have unveiled since then, and that either confirm or adjust your expectations from when you originally wrote the book?
Well, if anything, because the debt has, if you look at the debt in 2013 relative to now, that alone confirms a much higher price for gold, and it's not about to abate. So the elements that were in place in 2013 now are much higher, and would indicate a much higher gold price.
One of the things that people would be helpful if you explain for us, you mentioned a correlation historically between, for example, U.S. Sovereign debt and gold price, but can you help people understand why? Why would there be this correlation? Because there could be correlations drawn between any phenomenon in nature, but why does this one make sense to you?
Well, because gold is the ultimate form of real money. Everything else is a credit instrument. So the issue is when you're piling up the debt, then in real money terms, the price of gold has to rise proportionately. Now, it diverged in 2011, but I think there's strong evidence that that involved manipulation. Like recently, J.P. Morgan has been labeled a corrupt organization, and several senior people are being charged under Repo for manipulating the gold and silver markets. It is one example. So that if anybody that watched the pricing for gold and silver would clearly see that the markets were being manipulated, and they have been in other areas. And there's been lawsuits for the LIBOR scandal, the foreign currency transaction scandals, and so on, where banks have had to pay billions of dollars in fines. So this is not a conspiracy theory.
You mentioned in passing there the possibility that funds, for example, retirement funds or other types of mutual funds might, or any investors, might elect to diversify out of being solely dependent on the stock and bond markets into a higher percentage of physical precious metals. One of the reasons that might happen is if people wanted a flight to safety because they perceive there to be instability in the financial systems, in the banking system in particular. Can you talk to us about what your take is personally on the bond repo action by the U.S. Federal Reserve injecting, it's been argued, anywhere between $75 to over $100 billion nightly into the either short and long-term liquidity status for banks? Do you see that as a specific danger signal for the health of the banking industry and the financial industry?
Well, yes, and anytime you have the federal bank intervening in the markets means there's a problem. So if there was no problem, they wouldn't be intervening in it, and there's a liquidity problem. They're trying to kick the can down the road even further, and that's what they always do.
If you could maybe help us turn our attention to the Brexit and Britain's on-again, off-again relationship with the Eurozone and the Euro currency, can you give us your perspective? You're in Canada, and in that sense, you have a special relationship, with both the U.S., Britain, and some perspectives that we don't necessarily have here in the U.S. about what you see as being the likely outcomes of Britain's exit from the EU and how that would play out for the British pound, how it would play out for the Eurozone and the health of the euro itself, and does it mean anything about the future of gold?
Well, my personal view is that the whole euro experiment is a failed experiment because you can't put together all these countries and have a bunch of unelected bureaucrats in Brussels sitting up making policy for each country that is not necessarily in the best interests of the country. So Britain's view to exit the Eurozone long-term would be a good thing. They can enter into trade agreements with the U.S., with Canada, which right now the needs approval by the bureaucrats in Brussels, immigration policy, etc. So I think it's that Britain exiting the Eurozone could be just the beginning of the euro coming apart. So what that's going to mean is short term, it'll be weakness in the British pound, weakness in the euro, and then gold and those currencies will rise proportionately. Long term, it may be a good thing for the UK citizens.
From your perspective as the one who is a founder of multiple physical precious metals investment funds, is there any impact to your clientele, the people who are the owners, the beneficial shareholders of your funds, due to the potential demise of the euro or the weakness of it?
Well, it's not direct. It is that if you have those things happen, then price of gold goes up, and then our funds reflect, because our funds are both Canadian and US dollars. So it depends on what the unit holder has bought in. So you'd have gold going up in all currencies. Like right now, if you look at the increase in gold, it's averaged about 10% a year in all currencies. Okay, the US dollar is one of the strongest currencies, so it's appreciated the least in US dollars. But across the board, it averages 10%. Over since 2000.
For people who've got the idea of contrarian investing has always been, don't go necessarily where everybody else thinks it's obvious you should go, but bet against the crowd, and you'll find yourself in the place where the pendulum is going to swing to. And so what you just described is precious metals have for the past 6 years or so been remarkably low cost in U.S. dollar terms compared to where they've hit as highs in the past when there was economic concerns. Before we talk more about individual ownership of precious metals, I just wanted to get your take on the major stock market indices in the U.S. have been hitting record highs for the past several days and weeks. Do you believe that this is a result of true value discovery, price discovery of a robust economy and booming justification of earnings and forward earnings, that kind of thing that justify these lofty stock market valuations?
No, I think the market valuations are largely because of the Fed creating money and the money going into the stock market, the corporate buybacks of shares, and that's what's feeding it. Fundamentally, the economy is contracting, real estate is down, the transportation index is down, housing is starting to decline. So those are all the decline, and that's pretty much global. So there's no justification for the stock market to be going up. But this is typically what happens in the tail end of a bubble. You get that final push up, and people kind of lose their sense of reality, get caught up in the momentum of the thing. But that's the most dangerous time. That's when you should just take your money off the table and sit it out. When you look at it from this point forward, stock market could decline 50 to 70%. What's the upside? 5, 10% maybe? Not the kind of odds I like.
If we could tie it together, something you just said here with something you mentioned earlier about Fed creation of fiat money, or not just the Fed, but all the central banks creating fiat money. You mentioned, I think it was in the context of unfunded liabilities and entitlements and that sort of thing, of some huge number of trillions of dollars that is not realistic for the central banks to be able to create that kind of money. But frankly, we haven't seen rational limits being imposed or maintained by governments anywhere as far as limiting the amount of fiat money that they've been willing to create. And in fact, as you mentioned earlier, it is kind of like going up a hockey stick of exponential growth curve. So especially with like some modern candidates talking about modern money theory, and you can just pay off all the student debt and pay off everything with just by creating more money. What does that kind of scenario, just if you just take us on a thought experiment, what kind of a scenario does that play out? How does that affect gold if governments in fact do just that? They just try to paper over everything, including the derivatives complex or whatever, just by creating enough money to just cover up all those sins.
Well, it looks, you look at the magnitude of the difference. So in 2008, the Fed created about roughly 5 trillion, okay, to bail out the system. But the pension deficit is 300 trillion, okay, and it's magnitude several times that. So if you get to a point where you're trying to print too much money, then you've got hyperinflation and you get ridiculous numbers for gold. Just look at Venezuela. The inflation rate is in the thousands of percent. So check out the price of gold in Venezuelan bolivars. That's what happens.
Is a fair way to look at that to consider that gold is actually holding steady while the currency crashes down, and so it's the currency becomes a more and more ridiculous measuring stick to measure something that's holding steady? Is that one way to think about that?
Well, that's right. If I recall the numbers, something like in Weimar, Germany, you could initially buy an ounce of gold for 75 marks in the early days, and then 4 years later, it was several billion marks an ounce.
In the face of the potential of this crack-up boom or bubble of everything that we're currently in the last hurrah of, or near the last hurrah, what can an ordinary individual do, and what factors in your mind should they be considering when trying to weigh the decision of whether and when and how much precious metals to hold as way of protecting their family and protecting the wealth of the money that they earned through hard work?
Well, the issue becomes like, my view is that most investments today have too much risk and not enough return. If you take the Dow to gold ratio, it takes 18 ounces of gold to buy the Dow. So you have to ask yourself, if I take 18 ounces out of the vault and buy the Dow, am I going to get more than 18 ounces back next year, next month, 5 years from now? It's a decision you've got to make. Okay? If it's not going to give you more ounces than you put in, leave the gold in the vault. Everybody's looking at it backwards. What percentage of gold do I need? Start with 100% and justify the investment in gold ounces.
The mindset that you're describing, I think we have to give a little more explanation there, because you're coming from a mindset where you're seeing gold as the real money, but for generations now we haven't been led to understand that as a society. Can you take us back there?
Well, the problem is gold has been money for 3,000 years. The problem has been whether you take a financial planning course or a business course in university, none of them have courses on money. Okay, so this is like teaching carpentry to people without explaining to them what wood is. But there are no university courses explaining money, gold or otherwise. So we get caught up in the fact that the little green pieces of paper in our pocket are worth something. They're just pieces of green paper. So it's kind of a contrarian version look at that. But like I say, if you do your homework and study, gold as money, then that's the starting point. So,
ironically, you say it's contrarian, but actually you're reasserting something that the human race has basically either known or rediscovered over and over again in all corners of the globe for millennia, and that we've just seemed to have been in a temporary dream have forgotten in modern Western culture.
Yeah, and it's been since 71 when the U.S. dollar came off the gold backing. Up to that point, gold countries could exchange U.S. dollars for gold. Go back to 33, then the individuals could take their pieces of green paper and exchange that for gold ounces. So over that was gradually removed, and since nobody took any courses on money or gold in university ever, so they haven't really sat there and thought about it. When I started the fund back in 1998, it took 4 years to deal with the Ontario Securities Commission. So while we were going back and forth negotiating with them, I was doing the research on gold and money. And initially I couldn't believe what I was reading, because there was no limit in terms of how much money could be printed. There was no constraints, no limits. And the further you dug in, the more bizarre it got. So I just encourage people, do your homework and have a clear understanding of what money is and what it isn't. Green pieces of paper aren't money.
We've been speaking with Nick Barisheff. He is the president and CEO of BMG Group. He's the founder of Physical Precious Metals Funds, and he is the author of $10,000 Gold. Nick, could you let everybody know how they can get a hold of your audio CD or the versions of your book?
Well, the audio CD is on Amazon, and it's also the digital versions are on a number of digital platforms. So if someone looks up $10,000 gold, just get a variety of choices. In some cases, you can just download the audio directly.
Thanks, Nick, for joining us here again on Finance and Liberty and Reluctant Preppers. Before we let you completely go, can you stick around for one more bonus question for our Patreon subscribers?
Thanks for inviting me, Dan, again. My pleasure always.
Hey, Reluctant Preppers, if you want to hear more bonus footage from other guests we've had on, come on over right now to patreon.com/reluctantpreppers and access that bonus footage there. Take care.
It seems so hard to order. Who can I trust, and how do I even start?
Oh, you just go to sdbullion.com/rp, pick out whatever gold or silver you want, add it to your cart, you can check out. and it's on its way. And they're A+ rated by the Better Business Bureau.
Wow, it's that easy?
Your first ounce of silver is at spot price, and you get free shipping on any order over $99 at sdbullion.com/RP.
After I order gold or silver, how can I trust I'm going to get it? And I don't want everybody to know that I'm ordering gold and silver.
Oh, it's okay. It's fully insured. It's trackable, and you have to sign for it, so nobody else is going to get it but you. And it comes discreetly packaged. If you order a small amount, like maybe gold, it'll probably come in a box that looks something like this.
Okay.
And if you order a large amount, maybe like silver, it'll come in a box that looks something like this.
Wow.
But it doesn't say gold or silver on there. It might say something industrial or something else like that, but nobody's going to know what you ordered.
Oh, that's great to know.
Your first ounce of silver is at spot price, and you get free shipping on any order over $99 at sdbullion.com/RP.
If I own gold or silver, how will I ever be able to spend it?
Oh, sure. Well, consider good times or bad times. Like in good times, you can sell it back to the same place you bought it from. sdbullion.com/RP will buy it back at the best price guaranteed on the internet. You can take it to a local coin shop and get cash in your hand, completely anonymous. Some people you know may be willing to take gold or silver coins in exchange for goods or services. Now, in bad times, when things have really fallen apart, time after time in history, people have found that in hard times, gold and silver really does come through as something that people recognize as value even after everything else has failed.
Your first ounce of silver is at spot price, and you get free shipping on any order over $99 at sdbullion.com/RP.
What if gold or silver drop in price after I order it?
Well, everything fluctuates with time, but nothing has held up longer and better than gold and silver throughout all the changes that have happened in history.
Your first ounce of silver is at spot price, and you get free shipping on any order over $99 at sdbullion.com/RP.
What good does gold do me anyway? I can't use it for anything.
Well, I think I found a form you might appreciate.
Wow. That's beautiful. Wow, I can wear that just about anywhere.
And you can take it with you through airport security and across borders. It's small and compact and lightweight, and you can even hand it down through generations.
Your first ounce of silver is at spot price, and you get free shipping on any order over $99 at sdbullion.com/RP. Reluctant Preppers provides educational awareness and commentary only. Opinions expressed do not constitute personalized financial advice. Viewers are encouraged to do their own research and seek qualified personal financial consultation before making investment decisions.